China chemical industry is about $1,550 billion. The Indian chemical industry is about, say, approximately $150 billion. If there is a 10% shift of the Chinese chemical industry to the Indian businesses, we will double our footprint of chemicals. So that is the overall format. What is China plus one? If you will see during the Trump regime, he came in and put a lot of tariff on Chinese products into the US. And the biggest partner for chemicals for China was the US and Europe, where many dedicated plants were put for the Western countries for supplying to them. With these kind of tariffs, and with each country now, the geopolitical nature has changed to an extent where every country wants jobs. Every country wants to have self-sufficiency. Every country wants to be insured against supply chain disruptions like it has been happening in the industry for the last 2 years. And therefore, when a majority of their dependence was on China, all major multinationals wanted to develop a strategy where they would have China plus one, China plus two. They would encourage manufacturing in their own countries wherever possible. And therefore, they would look at countries like India, which already has a fantastic ecosystem for chemical manufacture. We've been producing chemicals for more than 120 years. So that is the kind of ecosystem that India has for the chemical industry. And this China plus one strategy is basically an alternative. It does not mean that Chinese people are going to shift their plants as an exodus to India. That is not going to happen. But major buyers of these chemicals would look at alternatives and credible alternatives to make sure that their supplies are absolutely uninterrupted and continuous, and they are hedged against any one country risk. As you know that China is not a democracy. They have no such land issues. Our first problem for chemical industry limitation comes from land, availability of land. Here the government says that here you put up 5 factories, they give you the land, money was available cheap, incentives were given by the local governments, and entrepreneurs could easily just get into that system and set up huge plants, and which is what all the multinationals took advantage, formed joint ventures, kept, put in the investments for their own companies in China. But you will see over the last 2 years, there have been a lot of environmental issues and safety issues. I'm not saying that this is a broad line across all Chinese companies, but many Chinese companies in this endeavor of fast growth and catching the train did, adjust some of the standards of environment and safety, and therefore these again became an issue for the supply chain for multinationals. Let me just start with some numbers. Our Honorable Prime Minister has been talking to us about a $5 trillion economy of India by 2025.
Right.
Today, the Indian chemical industry is at about $150 billion, right? In the next 4 years or 3 years, we hope that this will double to $300 billion. 10% of the Chinese market size, but we are also growing as a CAGR at more than 11%. So that 50 billion will come naturally without doing any investments. But about to achieve $100 billion extra revenues of the chemical industry, we will need to fast track many of the things. And I think the opportunity here is that the government is looking at the chemical industry for giving certain incentives. Last week, also, they have recommended to give the RODTEP for the chemical industry, which is an incentive as a set-off of other local state duties and taxes as a set-off on exports of our product. So I believe that the chemical industry will grow to $300 billion. And this fast track did not happen, like I told you, because of the land, because our energy costs were too high, and because there was a lot of dumping, primarily from Chinese industries. Even today, we have an import of more than $50 billion of different chemicals coming into India, out of which 25% is from China. You know, all the petrochemical companies are expanding. So petrochemicals are basic feedstocks, and there is a big movement going on of oil to chemicals. So in anticipation that tomorrow petrol and diesel will be overtaken by renewable resources, whether it be hydrogen, electrical cars, or green fuels, all refineries have now put in investments on the table. We have about $16.5 billion already on the table. And the next 3 years, there are proposals of another $100 billion of petrochemicals that will be invested across various locations, which includes private and government organizations. The main opportunity for chemical companies, which are our members of ICC, lies in the fine and specialty chemical business. These businesses are catering to the requirements of pharma. They're catering to the requirements of agro, pigments, and other allied industries. So we believe that there will be a $50 billion investment that will be coming into specialty and fine chemical industries. Why do I say that? Because we have a very robust pharma industry. This pharma industry, you take all the biggest names and the biggest exporters of pharma products all over the world. India is actually the hub for pharma manufacture. All these manufacturing companies are importing a lot of their specialty requirements from China. And that amount may be about $10 billion. Right. So our belief is that all these import substitutes, as well as a pull for exports, where international companies will want companies who have the capability to set up dedicated plants for them and buy from them at long term, will also be a segment that will draw a lot of investment. So I would say it is across the table, where specialty fine chemicals as well as petrochemicals are going to put in all the money on the table. The third thing that I would like to tell you where investments will come. The government of India has actually had PLI schemes for the pharma and also for some electronic producers. Right. Now, if you see, assembly partners of giant chemicals such as Samsung and Apple have already moved to India. Right. Okay, American firm Hasbro has moved a significant proportion of its production out of China factories in Vietnam and to India. Hyundai, if you are aware, Hyundai Motor Company is boosting its manufacturing in India. So what we are talking about, Foxconn, for example, has also announced it is entering a joint venture with Vedanta Group to make semiconductors in India. What does this mean for the chemical industry? It means only one thing, which is electronic chemicals manufacture will be a thrust area in the next 5 years. What all this means for India is that there will be a new manufacturing capacity for electronic chemicals. All these semiconductors, etc., require high purity electronic grade chemicals, and that will become again an area where investments will come in. Of course, you have been reading about Reliance Industries and many other industries talking about investing billions and trillions into green hydrogen. Again, an investment in the chemical industry. There are many decades where nothing happens or very little happens. And then there are a few years where decades happen. I think India has this opportunity. It is like the IT moment for India to take advantage of it and get in these investments into Indian chemical manufacture. This is really an inflection point where if the government gets it right, we will not only reduce imports, we will increase exports, and we will become a hub for different kind of chemical manufacture in the world.